SBA EIDL loan increase versus SBA 7A loan, the fastest and most easiest SBA process out in the market. I will be showing you with a 90% approval rate and being considered for multiple products in the meantime when you get approved for your SBA 7A loan. I'm going to be going through that and so much more in this video, comparing, contrasting, going through ultimately what is the best option for you. Do you even qualify for this SBA 7A? If so, what should you do? If not, what are your other options? And before I get started, my name is Michael with Viral Funding Solutions. And no further introduction from myself. I know you want to get right into it, and so do I. And I'll be jumping into the share screen in just a moment to go over these SBA 7A options. But what I want you to know is that the EIDL, if you're watching this as someone who hasn't seen my content before, or maybe you're unaware of it, the EIDL loan has been paused, has been exhausted in their funds and their reserves depleted. I know they're still trying to figure some things out on their end to see if it'll ever open up again in the future. The Targeted Advance grant, similar positioning. And so you have a lot of individuals who are still in the queue trying to get processed. And at this time, it is not open. So I know a lot of people will still want to ask me, well, if you can help me get my EIDL loan processed, this and this and this. And I won't do that. I'll give you the information necessary. And from what I know from our back end on the loan officers and what they're going through and what they're thinking. So let's just leave that aside and let's look at this SBA 7A loan option that may be the most attractive and best solution for you. Now, the EIDL loan, COVID relief, right? They're both government SBA programs, but the difference is that the EIDL is for people who have been hard hit due to COVID, and it's more of a business operational, payroll, trying to recover, maybe debt, other expenses, and it's not primarily being used for growth and expansion. Maybe you're not purchasing that huge equipment so you can then profit 20 to 30%, 10 to 15%. And perhaps you aren't in the expansion phase yet, but you just needed the funding to stay up afloat, or you are and you're using some of those funds for a little bit of expansion and month-to-month revenue, and then year over year in profits, however much that may be. Some of us have less, some of us have more. But regardless, this is over here being utilized for recovery. And then the SBA 7A, unlike it, is primarily used for growth and expansion. So right there, that could have already eliminated a lot of you watching this video thinking, oh, well, I just need it for COVID relief, but now it doesn't look like I can get it because it's my primary use of funds. Now, if it were secondary to it, then it has more purpose. But what happens is that the lenders want to see that, how am I using this funding for? What are going to be my projections in the next month, 2, 3, and a year from now? Because it is more of a longer term, and I'll be getting into the terms and rates in just a moment. But they want you to use this as, hey, growth and expansion, but they also will look at your profits year to year. They want to make sure your profits are steady, that they're growing. Generally, this is a very credit and profit heavy program. I apologize if the screen turns a little darker. There is light coming in. It's just this HP computer. I don't know what it does. It's a new one. And then there's some of the lighting again. But what you see is profits, usually 10 to 15%, if not 15 to 20%. And usually just about every industry is similar. So they can fall between that 10 to 15 or 15 to 20%, 10% at a minimum. And they may want to see a little bit more growth in a specific industry over a year. How much profits? 10 to 15, 20%. Are you less than 10%, but you have higher revenue, month to month, cash flow? Maybe that won't get you in. And so they look at your profitability and your tax returns. And this is stuff that I can collect from you. I'll show you what piece of documentation would be necessary in a bit when I get onto the share screen. So they'll look at profits. And then second, they'll look at, it's not second to it, but it's in the same, at your credit, not just the score, FICO. You have to have a 680 Experian, Equifax, TransUnion. They look at it more deeper. It's a deeper analysis. This is why there's a hard pull, and they'll assess, okay, your credit reports is one thing. We have your consumer credit reports, and how much deeper we have to look at, we'll usually let you know, or we'll go through it and say, hey, we need to look deeper into this, and we'll go and say, okay, do they have any late payments? What's their credit utilization? what's their debt to income ratio, how many inquiries, if any, how much debt are they taking on. That's the same thing as I just mentioned. So you have to be very careful about how much debt to income, less than 43%. Your credit utilization needs to be low enough. I'd say even lower than 30% if you can, not even half of that. If you can keep it as low as possible, do it. And then that changes from time to time, especially in the market, but you're going to see that very common. In the approval percentage, usually when you see a lot of these business loans, you get approved between 10 to 15% of your annual gross revenue, your annual gross sales, if not up to 20%, usually 10 to 12. But the SBA can approve you for a little bit more on what they guarantee on their end. And then a lot of the times you can get a little bit more room to get more funding. And we look at your debt to service ratio, and then we look at your profitability, and we look at those two numbers, and we make a determination on how much you can get. And then you can see like 10% down payments, and if need be, we could take equity, real estate. It's not their preferred method, the SBA, but they will look at that equipment. What they want primarily is accounts receivable, so unpaid invoices. So if you collect these invoices from your customers, then you can give them up to the SBA, or you can give them up to an invoice factoring company if you're familiar with it, if you're getting paid on terms, and then you get funding right away. And so that's their primary way of looking at collateral, is through accounts receivables. In other words, here, unpaid invoices. So that's what the expectations are: growth and expansion, COVID relief, and then secondary expansion. Maybe secondary here can be COVID relief, debt, some business operational expenses. But you should be over here looking at it as, hey, I'm going to open up a second location. Then I got to hire 20 to 30 more employees. And then I got to build a roof on top that's got to get changed. And then I have to do this with the LLC. And then this is going to help me be profitable more in about 2+ years or 5+ years. I recently released a video on this segment. That's why I've been continuously creating content on the SBA EIDL Loan versus, and I created already another couple on the merchant cash advance and the unsecured term loan that I'm going to link to you down below. And there may be quite a few by the time this is done. So make sure to check those out. If you don't qualify for this, those services are down there in the description. Go through it very thoroughly. So the next topic, you have to understand your ROI. So with COVID relief, you're not necessarily looking at in 2 to 3 months, I'm going to grow 30 to 40, I'm going to go 10, 20% in gross revenue. And yes, you look at that and you say, well, I'm going to recover and probably get back to where I was once at, or where I want to get to. And then again, secondary use of funds can be primarily used for, or those be used for expansion, for growth, and quite a few more. But over here, you're looking at it and going, yeah, well, I'm going to use this funding and it's going to produce to me in about 7 years about an extra 500,000 overall. And so you're looking at it from that perspective and asking yourself, what would be my short term and what would also be my long term return on my investment? It's not so much about just, I want reserve funding just to have it. If they look at it and go, wow, you just want funding just to have around, they're not usually going to approve of that. It's like when I spoke about the unsecured term loan, which is the other one that I linked to down below. And I spoke about if it's 1 to 2 years without collateral, okay, well, in between a 1 to 2 year time frame, what is your return on your investment? Like, how much time do you actually need to use these funds? And if you just needed 7 months, why would we give you a month? Why would we give you a year, 15 months, 18 months, when this project, all you needed it for to get done was just about 7 months? We could possibly get you the year, and then that's where you fall in, but there are no prepayment penalties, early payment discounts, paid off earlier. But just understand that the use of funds need to make sense in the current marketplace for each and every industry. So those are a few differences between them. Obviously, the down payments and a few other things that are there. But let me jump into the share screen and go through the SBA 7A a little bit more, and then we'll transition to another topic. Oh, by the way, let me move this over. There will be this questionnaire form down below. Perhaps you haven't seen this as this is the first time, or you've seen me before, you just haven't come across this. You can complete this questionnaire form below to get a personalized and customized email response for your best funding option and options. Plus, you will get a free 6-step pre-approval lending checklist that'll get you approved for funding much faster with an asterisk there. Everybody's in a different situation. A disclaimer there. And so this is what it'll look like more or less. Maybe look a little bit different. I put just some of the funding services that I offer. There are plenty more you'll see on the homepage. So this is here at viralfundingsolutions.com. And as your business loan broker, expert / agent, I've really helped out a lot of industries get funding of all backgrounds, of all industries, and I've seen it all, honestly. And even when the market is changing in today's economy, I know I keep up to date with all of that. I go to meetings. I'm at the top of what I am doing. And I'm not saying that to be cocky. I've never been a cocky person. You can ask the people that are closest around me. I'm very humble. That's what they would say, just really respectful of your energy and your time. And so if you can replicate that in return, if you're serious about getting business funding, and so you're not making mistake after mistakes, going through other online marketplaces, people that don't even care, they just look at you as a number. They don't give you all the details. Let's be honest, they don't. You just see them being advertised so much more online. They have millions of views on this. You have to be careful of all that because they don't have your best interest. You can be overpaying for something. You might not be giving it enough of a reason. And then now you understand whether you qualified or you didn't, because I'm going to show you all of that. So check it out down below in the description, and you can simply fill that out in less than 30 seconds. You can even get started on the thank you page once you see that, if it hasn't changed yet. But this is the SBA 7A loan, and I've created content on this on the past that I'm going to try to link you to down below, like the SBA 7A versus the 504 and a few places, which I'm going to show you here today. So the SBA 7A program, it's SBA's most common loan program nowadays, with EIDL being, I would say, the first, but outside of EIDL, the SBA 7A is the one people will turn to. Includes financial help for small business with special requirements. This is the best option when real estate is part of a business purchase, but it can also be used for things like short-term and long-term working capital, and refinance current business debts, purchase furniture, fixtures, and supplies. So usually you see 5 to 25-year terms with the SBA 7A, and usually a 5 to about 10-year is about used for working capital. Anything over that, maybe it's for purchasing an existing business and you have to do a lot of extra steps that I've seen. It could be for equipment that's bigger purchases, maybe multiple amounts. And then when you get into the longer amount, about the 25-year term, that's where you're talking about real estate. And that's a bit different. And so once we get into that side of the equation, then that's a whole different topic. Refinance current business debt, purchase furniture, fixtures, and supplies. The maximum loan amount is $5 million. And there are a variety of them. I won't cover all of them. There's like the SBA standard 7A, the smaller one. You have the Express, the cap line programs. You have quite a bit. And I spoke about that in a different video. Key eligibility factors are based on what the business does to receive its income, its credit history, and where the business operates. Your lender will help you figure out which type of loan is best suited for your needs. And I'll be there along the way too, because we all communicate with one another, with the best underwriters and the best lenders is who I work with. And so we're always in connection, and I have great personal and business relationships with. And that's the difference when you come to me. You're in the best of hands. You know that I am able to communicate with my team. And if they believe in me the way that I've been able to help them, then they can look at this and be a little bit more flexible and say, hey, if they did this, if they did that, we can work it out a little bit better this way. And there are a few good things about it. Are you eligible? To be eligible, businesses must operate for profit, be considered a small business as defined by the SBA, be engaged in or propose to do business in the US or its possessions, have reasonable invested equity. So when I ask you, the question is, do you have an equity to put in if necessary? What amount of properties, what type of properties, for how long have you had it for? If you had to do an appraisal, would you take the time to go through that process? So there are quite a few more things that I'll also ask for, more specifically when it comes to collateral. Use alternative financial resources, including personal assets, before seeking financial assistance. That's very important. A lot of business owners may have not taken out a business loan or a cash advance, etc., but you're looking for the SBA 7A. And so we want you to be more resourceful and seeing what other options have been available. And the thing is, when you've tried other routes and they haven't worked, what makes you think that this one specifically would? Just because it's an SBA loan doesn't mean it will. And so there are a few qualifications when it comes to the revenue and credit profile that I'm going to be getting to in a moment. So please stick with me. Be able to demonstrate a need for a loan, use the funds for a sound business purpose, not to be delinquent on any existing debt obligations to the U.S. government. Some business may not qualify. We'll go through that exactly at this second. How do you use it? Long and short-term working capital, revolving funds based on the value of existing inventory and receivables, the purchase of equipment, machinery, furniture, fixtures, supplies, or materials, the purchase of real estate, including land and buildings, which I have quite a few. All the stuff that I've said right now up until this point, I have quite a few SBA 7A applicants, and plenty of them are already getting approved, and they're out as the last stage. One of them just got one, and I'll continue to have more. It happens time and time again. But if you qualify, now just because the interest usually at a prime rate of about 4.75%, you'll usually see that with bank rates in today's market, and it could change. So you might be seeing something higher or lower in time. But with this impending recession, you've seen it go higher, and we're trying to keep the level so we don't go even deeper into this impending recession. And so prime rates usually plus 1 to 5%. So 4.75 to about 1 to 5% usually. So what it ends up coming out to, five, let's just call it 5 to 8 or 5 to 9%. Usually you can get under 10%. Unlike the EIDL, there's a contrast, 3.7 for profit and like 2.75% nonprofit, where you're getting 5 to 9%, which is still a bargain. It's amazing. Both monthly repayments and long enough terms. You can see 5 to 25, this one up to 30, it's a bit different. Now, what I don't want you to think about is it's only about the interest, it's only about the term, it's about the benefit exceeding your repayment. So even if you don't qualify for this, and I'll get into this right now, there are a few things you have to have, like over 300,000 annually, over 500,000. It just depends on the type of SBA 7A we're going after, and I'll cover that in a moment. And a 680 and above FICO, and it should be very, very clean. It's like almost close to the bank. And if you have too much debt, inquiries, too many disputes, you have to take care of late payments, anything derogatory, bankruptcies, liens, foreclosures, all this stuff can pause you from getting this type of funding. So if you need help with credit repair or any of this, then I have a great resource I'll link you to down below. The construction of new building or renovation in an existing building, establishing a new business, or assisting in the acquisition, operation, or expansion of an existing business. So yes, in a way we can finance a new business, but is it parallel to the existing business? Keywords, existing business. Primarily, we want you to have something already operational, not non-operational. You may have been out of the game for some time. You had to pick up another job, and because you had to go bankrupt, and if you realized that you had the SBA 7A or these other programs available to you, you would have done something different, which I get a lot. And I get it. I've been in your shoes. I know how difficult it is to receive government funding, as well as private and non-private lending options. It's very difficult at times, and it can be a struggle when you don't have the qualifications or the requirements. And I don't want to get too far into that right now, but you see that acquisition of an existing business as well, which a lot of people try to do. A lot of people submitting, and you just may not qualify. You perhaps can't come through the SBA. You're trying to purchase an existing business, but the SBA 7A won't work because of the revenue, because of the FICO, because of the 2 years plus you have to have time in business. 680. Generally nowadays, you have to shoot for 700 and above. 700 and above isn't enough. About a 725 and above will be enough, and even a little bit underneath that, but you have to have exceptional revenue. If you have a 680 minimum FICO, you have to have exceptional revenue, profitability of your business. The use of funds overall has to make sense. If you're just using it for something short term, but you wanted this amount of time, they won't give it to you. Refinancing existing debt under certain conditions. What do you need to apply? I won't go too much into all that, but you can see it on the screen there if you want to rewind. And I spoke about this in a previous video, and I went more in depth with it. And I'll cover some of the documentation. How do you pay it back? Most 7A loan terms are repaid with monthly repayments of principal and the interest. Payments stay the same for fixed rate loans because the interest rate is constant. For variable rate loans, the lender can require a different payment amount when their interest rate changes. So whenever they do see an interest rate change or something in your market that they see probably in about the near future or even in the long term, the duration that you have it in, they may make it variable. For a lot of these though, it is a fixed interest. And so now let me switch on over here and show you a product, which I said in the beginning is the hybrid SBA loan. It's a new expedited SBA process with immediate funding here through the National Business Capital site. And this is a great way of getting an SBA 7A loan amongst a few others that I'm going to be going into in the details and how I can help you with this. And I can give you more information of this. And again, that questionnaire form is down below. This is the fastest, easiest SBA process on the market with a 90% approval, larger offers given. So like I said earlier, how much you can get approved on your annual 10 to 15, 15 to 20. Usually SBAs can approve you for more, especially if you have the down payment. Usually it's 10%, can be between 10 to 20%. But 10%, very minimal, is what they would expect. And if you have equity, if they look at what you have on your assets report, and this is a lot of the times what I look at. I look at your income tax returns, your business, personal, year-to-date financials. Do you have a business debt schedule? Do you have an APAR reports, year-to-date financials, and a few bit more that I'm going to get into what I will ask from you. And so prime rate plus longer terms, Trustpilot 5.0, 4.9 plus in Google. Awesome place. What do you need to qualify? 2 years in business. Businesses that need funding to grow. 120,000 in annual gross sales. Whether you do 120K or 12 million in a year, we have your back. So this is, I want to be clear about this. This is like a bit of a marketing point. Yes, 120,000 could get you in, but don't do the minimum of 120,000. You know that with an SBA 7A loan now, generally speaking, you have to be doing 200, 300,000 and above in annual revenue, because 120 can be the entry point. This is the product where you can be looked at for an unsecured term loan, a cash advance, and or a line of credit. So at a minimum of 10,000 per month, right, that could get you in the door for those other products, perhaps not the SBA 7A. So have more, just say 120 is just the minimum usually for the unsecured term loan, the line of credit, and the cash advance. And then it could be a possibility of it mixing into the SBA 7A, especially if you have other exceptional details. But more revenue, the better, and profitability is what's most important with credit. Revenue is one thing, annual gross sales, but what's your profitability of your business, and how are you growing year over year? We don't want somebody who's setting back and then coming and then setting and then fluctuating so much, and then your reports just don't look good. And then having business credit is a portion of it that I'm going to speak about. 685 plus FICO, you can get in with 660, but in today's market, generally 680, 685 and above is what you need. And again, if you're just getting in with the bare minimum, your profitability, your revenue, your use of funds, all of that has to look clean, great to exceptional. I'm not even saying good, but great to exceptional. And the hybrid SBA loan was created from the demand of small business owners for a simple, faster SBA process. And if you want all of this, here I'm going to show you a little bit. And I look at a lot more on the back end. So what you're seeing here is just the front end. So I deal with a lot more. So dual track, a small business loan, start your application, small business loan gets funded. You can see the difference on day 2, and then day 2 with the SBA 7A loan, complete your SBA application. Day 3, SBA loan pre-approval. Day 45, the SBA hybrid loan gets funded. So you have the 45-day time frame to get funded for this product. And in the meantime, you could get funding for the unsecured term loan, the cash advance, and or the line of credit before then. And it can be much, much faster, not even a month, less than 2 weeks, less than a week. It's as fast as some of those cash advance and primary unsecured term loan lines of credit options. So day 180, National's expedited SBA loan process eliminates up to 120 days of waiting. So what are your benefits? If you're asking, you can immediately bridge capital, whether you need it for cash flow gaps or just that, bridging cash flow to make sure it gets you through the month. You got to make payroll, you have business operational expenses, you have a piece of equipment you're paying a lease on, you have other forms of financing, you're bridging to construct a new home. I know this is huge, specifically in real estate for real estate investors, but if you're a builder, that's another way to look at it. You're building custom homes and you can use this very well. But there are many other purposes. This is just a few examples of the many, and I deal with all industries: trucking, construction, medical, retail, restaurants, salons, the small mom and pop shops to the largest corporations. Whether you're doing nothing in revenue right now, you're a complete startup, or you're up there in revenue per month, per year, I help out just about all. And I've seen everything really coming through. Quick, streamlined SBA process through an exclusive process, receive SBA financing in as little as 45 days. So you get increased approval rates. You get to receive multiple offers through our exclusive global marketplace of 75 plus lenders. So just imagine yourself getting in front of 75 plus lenders, but more specifically to those who deal with the SBA 7A. So you may have 2 to 3, 3 to 5, maybe just one who looks at your file. But what's happening is we're not using your information against you. I don't want you to think that we're pulling inquiry after inquiry. No, we're not doing that at all. This is very safe and secure, but we're looking at and saying, at lender A, tier A, lender B, probably 2 tier A lenders, or this lender is looking at this file and they're going, yeah, I can get you more. But then this other one comes in and they say, no, we can give them an extra 30,000 at the same rates and the same this. Whoa, now you just got an extra 30,000 with nothing else changing. Or we dropped your rates. Maybe we gave you a little bit less funding. We kept the rates the same or increased the terms. So there are benefits to this. And believe me, this is what you want to be doing. There are direct and indirect, and I deal with both. This is a great way to go. We've secured over $1 billion in funding through our exclusive marketplace, the fastest and easiest SBA process on the market for you to leverage using working capital for your business. So unlock the lowest rates, longest terms, and highest amounts. 50,000 to 5 million, 10 to 25 years, time to funds, 1 to 3 days, usually with unsecured term loan of those. How can you use this for business growth? Buy new equipment or inventory, hire your new staff, however much that is, or prepare for seasonal changes, which I deal with every day, especially my own businesses. I do that every single time. I know, like, from summer times, I have a huge growth. And then maybe come winter, it doesn't fall completely, but it doesn't peak as much. So business expenses get extra working capital to manage payroll, bridge gaps in your cash flow. And that's another thing. If you're looking for maybe accounts receivable financing, which is another form, then we have a specific form of financing for accounts receivables that I'm going to try to link you to down below in the description. Business opportunities. And the thing with accounts receivables, I don't want to go too far ahead of myself, but those are usually the lowest interest you can receive. So prime rates, 4.75% plus 2%. And in some cases, 4.75% plus 2 to 6% or 2 to 4%. So you realistically can get underneath 8%, and you can get that through the SBA. But there's another specific form of financing that's specific to accounts receivable financing with different terms. A lot of advantages. Business opportunities: expand or open a second location, take on more clients if you wish, or capitalize on full quarter discounts. Every industry is different. You may be an e-commerce business and needs inventory for my ROI would be much better at this amount of time, and so forth. So there's so much to look at, and you can see a lot of the reviews there. #1 fintech marketplace offering small business loans and services. You can see here 5.0 based on plenty of reviews. And if we clicked here, you can see that. Had a very positive experience thanks to the excellent service and communication I received from Joseph. I'm just here for money and insurance. Thank you, guys. Some people will have an experience that they didn't like. And for a lot of these who write these reviews, they may probably have been misinformed. I don't misinform you. I don't over promise and under deliver. Some people just were upset. I've seen people do that. So take these with caution. Not all of them are true. So there are people out there who are just maybe wanting to promote another company, and there may be some that are, but not all. So be careful of that. Thank you. My experience has been wonderful and thorough. The process was simple and great. Joseph was great. He was on top of everything. So you'll deal with myself and a few bit of people as well, just to gather more information. So we're all in communication. You can see there, everything easier. Finance advisor with any documents or paperwork, definitely helpful, and a few bit more. So you can see that in this document as well, the SBA loan. If it's not the hybrid, we also have a few other ones. No prepayment penalty, monthly payments are available, reports to business credit bureaus, 10 to 25-year terms. Refinance up to 2 merchant cash advances if you have those underneath the SBA. 2 years time in business, 25,000 deposited monthly in business bank account, or 300,000 in annual sales. So that's overall an SBA 7A loan, what you want. And in the cases of a 504, 660 plus FICO, no bankruptcies, liens, foreclosures in any of the last 3 years. And so we're going to flip over here and focus again on the hybrid SBA 7A loan. But you got to see what are the annual revenue requirements. It's not enough to just say I did 300,000. Well, what are you doing profitability wise? When I look at tax returns, when I investigate that even deeper, bank statements if I need them. So the hybrid is the 2 separate loans, as I said earlier. One is unsecured financing, which means you don't have to offer up collateral, which can come in the form of a term loan, line of credit, or a cash advance. We can try to mix multiple amounts of those if necessary, which is amazing. I've spoken about this in so many ways, and you don't have to specifically come through National Business Capital as your only place. You probably started an application elsewhere. I won't start going and naming all of those, and you're in the right place. It's fine. And if you want to communicate with me, that's okay. But those other options are awesome because you don't need 5 to 25 years. You may not even qualify. The funding that you need is only going to take you 6 months. You don't want to be in debt that long. You want to clear up your debt as soon as possible. That's what I recommend you do. Even if you get 6, 7 months, does the benefit exceed the repayment? You may look at a cash advance and think, well, I have to pay back 300 daily. Well, your revenue, your credit, your time in business, your industry, you're a higher risk. And perhaps you have high enough revenue because we're basing it off of that. However, you're still a higher risk. You need to prove to us that you can pay this off. About refinancing, when you pay off about 50% of it, we can then drop your rates, increase the terms, give you more funding. And that's just how it works. You've never received funding online. Can we trust you? The average daily bank balances don't look. Or it does, but we have to look at the starting and ending bank balances, the amount of deposits per month. Something can happen and you're done, you're toast. And your repayability won't be there. And the lenders cannot they're taking 100% of that risk when there's no collateral involved. And SBA loans, if you didn't know this, are the three of what I call cash flow, collateral, and credit. You assess all three of those. And then other ones like the merchant cash advance, unsecured term loans are like cash flow based primarily, and then like credit can be second to that. And then you have lines of credit that are more credit based, and then secondary to that can be revenue and so forth, but non-collateralized. And then there's secured ways you can offer up for a line of credit and other forms of assets based financing. So if you guys want to learn more about that, I'll try to leave a link to you down below. Now, which can be funded easily and quickly. The other loan is a 10-year SBA term loan. And again, that's with the word of caution that a lot of working capital loans you see between 5 to 10-year time frame. So it has to make sense. On average, 7 years. So the 10-year has to make sense for you to get it. And it's going to be a financing project for the years to come. And it's going to be something maybe that continues to repeat. Maybe you had an ROI in the first year or 6 months, but you know in about 3 to 4 years plus from now, you're going to have this, and this is why you need to be put in that position. So SBA term loan, which we can get a letter of intent within a couple of days, but takes 6 to 8 weeks for you to actually receive the funds. Our SBA loans go up to about 5 million, usually is what you see anywhere. A business needs to be generating at least 120 year in gross revenue and 660 plus FICO, with a word of caution there, 680 usually and above, but 660 can get you in. But better revenue, better profitability will definitely help. And the 120K, that can be very helpful to get you in the door for like the unsecured term loans, the cash advances. But for the SBA, be doing more. The SBA goes primarily off of your credit score and profitability of the business. Underwriting checks. Credit is what gets people. The SBA loans, and let me come to this now, are based off profit, at least 10%, low debt to income ratio, less than 43%, even more credit utilization, keep it as low as possible. When you make payments or when you accept payments through your credit cards, make sure you pay them off right away and as soon as possible and or on time. I say do the first two, pay them off right away, however much you take out, but pay it. Because if you have something outstanding or something's been sitting in there, you're 100,000 in debt, that doesn't look good. You haven't made the right payments, you haven't paid enough of it, and it's been sitting there for years, and we're questioning how are you able to even get the funding we can give you if you don't demonstrate you can even make your own payments and you can even pay your own bills, etc. So at least 10%, low debt, low credit utilization, minimal inquiries, nothing bad on your credit reports, and so on. Plus, you have to demonstrate significant use of funds for growth and expansion, and not just recovery like the EIDL loan, as I said. You'll need a 155 plus FICO SPSS score. This is business liquid credit, but sometimes you can override that 155 business liquid credit score when you're getting over 350K in funding, and if your cash flow looks clean, you can show strength in business experience like you have in your FICO credit, revenue, and more, then we'll look at it a bit differently. But business credit established, if it isn't there, you're not building accounts, you're not building trade lines, at least open that up. Like you're not registered with the DNB through Experian, Equifax, you can't even get access to your consumer credit reports, your commercial, your business credit profile. It demonstrates that you're not usually adequately, or you're not doing it at all. You may be saying I have a credit card, but you're not paying through the right vendor programs. And if you need help building your business credit and would like access to a free video series on how to get access to over 150,000 that's not tied to your social security number, rather your EIN, and in some cases not get a personal guarantee, then look down below in the description. I'll leave that free video series for you to pick up. But if you already have that, go through it, take the time. I recommend going through where I went through, and it's the best thing you're going to do for yourself in the long term, especially in today's market. You want to protect your personal and your business credit and separate the two if you can. Revenue and more. So documents that I'm going to need, this is for the hybrid SBA loan. What I'm going to need from you is the 2021 business bank statements, and this is in relation to the current year. So 2022, 2021, we're in 2023, then I may need 2022, and so it'll look a little bit different. I'll ask you for this. 2020 and 2021 profit and loss and balance sheets. Year-to-date profit and loss and balance sheet, at least through the Q1. Previous 3 years of business and personal tax returns, no exception. Aging AR, AP reports, business debt schedule application. It's sent via HelloSign, and I will attach you to that. We have an in-house application I'd like you to fill out, and there may be a little bit more, maybe that's some asset application, but if that's not needed, it's okay. Maybe it'll be needed a little bit later on. However, this is the information. This is what you'll need, just a quick application to fill out, PDF, send it back to me, and then the rest of the documentation is what I'll ask for. Sometimes you may not have an aging AR report specific to your industry. You may not have any kind of debt. I have a few people right now who surprisingly don't. Like, I say surprisingly because, you know, a lot of people who are starting and even in their non they're not just newly established, but they've been in business for some time. They take a lot of credit card processing, and they take a lot of credit debt. They go into debt with all of this because they're paying through credit cards. And so they surround themselves with all of this, and then they can even, it's hard for them to get out of it. And so kudos to you if you're that individual. And I say that if I speak to you and you tell me you have no business debt, it's like, well, awesome, keep it up. And it's difficult nowadays too, because we're just getting over the whole COVID thing. But even during like the middle of it, the thick of things, that's when most business owners were using the most amount of credit cards. And they were trying to find other forms of financing outside of that because they have dug themselves so much of a hole that they wanted to take the funding that they could receive over here and use it for that business debt. Okay, application. If you meet these requirements and are willing to be patient enough to send me your documentation via email for what's asked for right above, and you don't mind waiting months to get your funds from the SBA, then we can explore this option. But also remember, we can evaluate you for the term loan, the cash advance, and or the line of credit, so we can get you those funds earlier. And in the meantime, we're still evaluating you for the SBA. So again, don't forget that you could be getting evaluated for the unsecured term loan, the line of credit as well, and or the cash advance on all three before you get approved all 100% with the SBA 7A. And it may not be that you get approved for that. So I would say if you don't make the necessary qualifications and you don't have the necessary use of those funds, don't go for it. So if you can please send me all the above documentation, I'd really appreciate it. You can reply back to this email. Usually you get an email if you fill out the questionnaire. You'll see this similar in that email response, and it is a bit more customized to the individual. So in the next part, you'll have to submit the application with us. That's on file. So please submit the application below. You don't have to worry about uploading the documents, as I can do all that for you if you send it to me here, or you can upload it yourself if you'd like, and we'll see it on our back end. So either way you decide, I can collect the information and I can do all that for you. I just need the application and so forth. There's a digital application you may want to fill out, so it is in there in case you want to do it that way. And that's what I would recommend, is even just submitting that. Note, you can start your application above and upload your documentation digitally, so we see it on our backend. I also did a review. Here's another option, and it's more customized, so you'll see more of a message right here and a little bit more, maybe some examples. So there's another SBA option. If you're looking for a 10-year, 30 to 350,000 in funding, where more of a FICO SBSS score is assessed. Here's an overview: loan size 30,000 to 350,000. And again, if we override the FICO SBSS, well, you have to have exceptional credit, bar none. Your revenue has to be high. So use or proceeds, working capital, debt refinancing, equipment purchase. So you'll want to demonstrate strong purpose for as well as growth and expansion to getting the best shot of getting approved. Time to funding, pre-qualifying 5 minutes, funding as fast as a few days, and just a few more details in there. So I'm going to quickly go through this because we're just over it. And if you submit that questionnaire, you'll see stuff similar to this. And I'll tell you not to go through this. So you'll see multiple SBA 7A options. I'll tell you something like skip, or there may be a message up here that says you don't qualify, please skip this. And there may be a little bit more information specific to what you're submitting. And so you see the personal FICO credit scores, no bankruptcies or foreclosures, no outstanding collections, no open taxes. And that's what gets a lot of people, the collections. No recent 30+ day late payments, as well as that one. I have quite a few people who didn't qualify because of that. Cash flow, sufficient business and personal cash flow to service all debt payments demonstrated by 2 years of tax returns. Some are 2, some are 3. At the maximum, usually it's 3. Eligibility, 2+ years in business. Business owners must be in the U.S. or lawful permanent residents. Business must be located in the U.S. Nonprofit businesses are ineligible. You must demonstrate repayability from their earnings. Your business must not be involved in lending, investing in real estate, religion, politics, gambling, or sex-related industry. So there are purposes for land, buildings, for commercial, especially with the 504. But if it's a quick fix and flip, it can be a little bit more difficult to justify for an investment purpose like that. So careful for those real estate investments. Use of proceeds, working capital, payroll, inventory, marketing, finance, receivables, bookkeeping, and legal fees, hiring, refinancing, this and that. A couple more things you see on screen there. So there's a little bit more where you can get started. And then I have another one here you can check out. But again, similar, it's just a little bit different. And I might give you some examples on what they asked for. So You get a maximum SBA guarantee percentage of 85% for loans of up to 150,000 and 75% for loans of over 150,000. So as far as collateral goes, real estate will be asked for. Down payments aren't always a requirement, but if need be, are usually 10%, but can range from like there's 10 to 30%, 30% being high enough because of the risk, and there's a little bit more. So let me go through this very quickly to make sure I didn't miss anything. Right, and then up here, you can see the SBA loan, and we have the business term loan, in which I made a review of. Look down below in the description, and I compared the two. You have the business advance, cash advance is 24-month terms, and that might not be my first preferred cash advance you go to. We might have a different one that's better, that probably you're already in the process of, that I would recommend. And then business line of credit, you can see that. And let me switch on over to see if I have any other screens here that I didn't miss. And if you have any questions, comments, or concerns, please feel free to voice them down below in the description. Let me know, have you ever tried getting an SBA loan, and what did work or what hasn't worked for you? So now you have a better idea of this hybrid SBA 7A loan, how it works. There's also the 504 I'll introduce you to. That's something that you're looking at with a few other components, a few other direct lenders and non-direct lenders, and what to do. But it's very important that you have the revenue, you have the credit, the profitability, you have the business credit established, you're building accounts, hopefully, so you're not looked at as having thin credit or no credit worthiness. That's what a lot of people get declined for. I have quite a few people right now, especially like with lines of credits. If you don't have business credit established, you're not building enough accounts, you're not showing the repayability, you're not making those payments, or at least on time. You may have it and a few bit more like on your credit, your personal credit, then you won't qualify. So when people come and try to get a line of credit, because the thing about those is you can withdraw and use the funds whenever you like. So there is a lot more flexibility in the repayment, the interest, the rates can be less than a cash advance and unsecured term loan. A cash advance of 19 to 70% or up to even more in some cases, or 1.19 to about 1.69 factor rate or a total payback, or an unsecured term loan with 1 to 3% for 12 to 24 months. So 12 by 2, 24, 12 by 3, 36, 24 by 3, you can already do the math there. It's just an assessment of your risk if you don't offer up collateral. And I previously released a video on the interest rates for all of this. So make sure you look down below in the description. I made a business loan interest rates video, and not only with SBA, but anything else, as well as check out the SBA EIDL versus the unsecured term loan. That may be your best route, and if so, okay. Or it might be the SBA 7A versus the merchant cash advance. There may be quite a few that come out in time. You could do maybe line of credit one or so forth. But those are the expectations with this hybrid SBA 7A loan. Don't just jump at it because you get lower interest and longer terms. That's not the best way to look at this. What is in the best interest for you? And you don't always need long-term debt, positive debt, if it's that. It could be negative debt if you're not ready for it, if you don't understand your use of funds. And know that it's much more of a scrutinizing process to go through the hybrid, or not just the hybrids, but any other SBA 7A 504 product. It is. And if that's not what's going to work for you, and you're just hung upon looking for the lowest price. I spoke to people today who texted me, thank you, I'm just looking for the best options, and I'm looking for offers, and I get you're shopping around, but don't do that. Don't even have, it's worse to have offers on the table and not say anything about it, or just keep declining them because you're looking for the lowest price. And what happens is the lenders are made well aware of that. They communicate with one another. And so you're like on the list, on their list, where they're keeping an eye on things. If they see you applying again, they may not go after your profile. You lost me, they'll say. You were complaining, or you just didn't want this. You were not even sure about what you were doing. And so don't do that. With myself, you're coming through a very safe and secure process, whether that be digitally or PDF and or. So just know that a lot of this can be digitally done. I may show you a PDF application on me with the rest of the documentation. So that'll conclude everything from me in this video. I know there's quite a little bit more about the SBA 7A, but you got to just hear about all of it now. And if you need help, look down below in the description to learn more about the getting started with the hybrid SBA 7A loan and all the other options included. And you've been able to see this contact form. So go ahead and fill that out and be honest about it. I would prefer mobile. Only reason is because I usually follow up with an email response. I don't heckle you. I don't harass you. I don't pressure you. But what I'll say is, hey, Jim, I just sent you an email with the subject line blue for your funding. This is what I'm going to show you. Please refer to it. It could land in the spam box. It might land in your primary folder, etc. And then that's how we go from there. You can honestly get started from that email right then and there. How cool is that? Instead of being on a call every day, let's revisit this next week, and let's revisit it in 2 weeks, and then in 3 weeks, which is in certain circumstances, it's fine. But there's a much faster way to do this. And I don't think a lot of people do it the way that I do. And it's most efficient. And I'm always going to be able to be here by your side. So let me look one more time to make sure I didn't miss anything. No, you got to see everything and so forth. So if you got value out of this video, please give it a thumbs up. Share it with others who you feel will get value out of it. It can be a complete stranger, a friend, or a family member. But at the end of the day, you were able to rise up and help them and understand their education is first and foremost. And then second, getting the business funding. Because going straight to business funding without getting a proper education like you are right now, you are going to mess up over and over and over. I see it every day. Even people come to me, Michael, I've received these offers, or I had these offers that didn't work. Can I get this here? They weren't properly educated. Nobody was able to do that. And I've been there. I've struggled where people didn't show up in front of me and say, hi, Michael, I'm going to take you by the hand and I'm going to show you how this works, what you shouldn't do while you're waiting for an offer, what you should do in between this. What are we doing in underwriting? And here's an education on this with these products or not these products. And there's a multiple amount of things you have to understand. And that's what I deliver for you on this channel, unlike anybody else will. So if you haven't subscribed to, please go ahead and do so and click the bell notification icon so you do not miss any future videos I come out with. That is everything for now. Talk soon.